Welcome back, investors. Jake here. In this video, I'm going to be opening a new long call position in my Schwab account, and surprisingly, it's in Netflix. When we check in with the markets, currently all of the indexes are green, and the S&P yet again is up over 1%. Guys, when you look at this chart, we were stuck in this down channel for 4 or 5 months. Yet in the last week, we've put up 1, 2, 3, 4, 5 huge green candles. What can possibly explain this? Obviously, it was the Fed doing their first interest rate hike last week and announcing that 6 more probably are coming this year. The reason why is because the economy is strong enough to handle it. Yes, inflation is high, inflation is a problem, but the Fed raising interest rates by 0.25%, 0.5%, it's not going to crash the economy this summer. So we've clearly created a reversal. Now I expect in the next week or so the S&P is going to pull back, but that's okay. That's normal. That's what the market normally does, even in an uptrend. We have huge green runs, slight pullbacks, huge uptrends again. As long as we're creating new higher highs and new higher lows, we're in a new uptrend. So when you see huge green candles like this, of course, there's going to be a couple red days in the near term. However, as long as the pullback doesn't create a new lower low, currently for the S&P that's 4,200, then basically we're in a new uptrend. So I think there's a lot of big money on Wall Street looking at this charts, and they're dumping their money in. Lots of people, myself included, have been sitting on the sidelines during this downtrend with cash they want to invest. So once again, expect a pullback in the near term. I'm probably going to buy more when that happens. But for the most part, we're probably going to uptrend through, I think, this summer. When is this recession happening? And recessions are a little weird because it's a lagging indicator. You don't know you're in a recession until you've had 2 consecutive quarters in the contraction of the GDP of the economy. So you don't know you're in a recession until 6 months after you've been in a recession. So I think the big money on Wall Street is just going to go ahead and put their money back in the market, assuming that basically no one's going to realize how bad things are, if they're bad, until this fall. And this reversal, guys, the S&P is up 7.7%. So anybody who is experiencing maximum fear and maximum pessimism, think about late February, early March, they just missed it. If they sold all their equities in their 401k or IRA and dumped all their index funds, they just lost 7.7%. And that's the game, guys. That's the game that the big money on Wall Street plays. They create this pessimism by selling out, hundreds of billions of dollars. They then wait for everybody else to hit maximum fear. They then buy back in and they get to enjoy this 7.7% gain. That's why in my 401k, my IRA, my Fidelity accounts, I'm just buy and hold. I'm not trying to time the market. It's only in my Schwab and Fidelity accounts that I, play around with a little bit of money trying to beat the market returns. So what is a stock that I think in the near term, 6 months to a year, that is going to outperform the index funds? And I think it's Netflix. And the reason why is because Netflix recently fell off a cliff. Currently down 44%. Market cap is only 166 billion after its decline. But when you look at the current valuation for Netflix, it's actually being valued right where it was prior to the pandemic starting 2 years ago. So the current share price is $384. Netflix on February 21st, 2 years ago, was valued at $380. So this is astonishing that in 2 years they've seen no capital appreciation on the value of their company. How can that be? We're going to talk about the fundamentals, but in the short term, I want to show you their technical charts. Is there a long-term uptrend slope line that we can kind of say what is giving Netflix price support currently? And you could argue there is, going back 4 or 5 years, all the way to January 18th. Looks like there was a sell-off in 2018. It hit this slope line. There was then a sell-off in 2019, hit this slope line. Here's the COVID crash. It didn't quite reach there. But Netflix sold off on earnings. Let's see, this was probably almost 2 months ago. So Netflix does have another earnings report coming up next month. And look at this huge gap down. It hit a peak of basically $700 and then fell after earnings to $400. So it lost almost 50% of its value. And what could possibly explain this? And the reason why is because of slowing subscriber growth. Netflix has been in rapid accumulation mode of subscribers, and as they become a more mature company, perhaps their subscriber growth isn't going to continue as rapidly. That has investors worried about, once again, their very high price to earnings, price to sales multiples. That doesn't bother me, though, because of all of the steps that Netflix is currently taking. That's what we're going to talk about in this video. I just want to give the quick disclaimer that the technicals for Netflix are technically very bad. Currently, it's below its 50-day, 100-day, and 200-day. So there's going to be a lot of overhead resistance for Netflix trying to get, once again, back above its 200 or potentially back to all-time highs. But I'm not trading this to hopefully get back to $700 a share. What is my short-term price targets on the call contracts that I'm going to be buying? And I would be perfectly happy if Netflix share price just got back to here. There was a bounce basically after it cratered, and then we had this sell-off because of the build-up to the Fed raising interest rates. So if Netflix share price currently at about $390 can just get back to $460, then I'm going to bail. I'm not trying to get back to $500, $520, $600, $700. I'm just going to buy some call contracts and try and snipe this and wait until it returns to about $460. And I think it's going to get there. So let me show you the fundamentals of what I look for in a company and why Netflix seems like a good deal to me right now. We're currently on the website macrotrends.net, and look at Netflix's revenue growth over the last 13 years. Now, what has investors, displeased is the slowing rate of increasing revenue growth, if that makes sense. So in 2018, they grew their revenue year over year for this quarter by as high as 40%. That's almost as fast as you get for, a company in the S&P 500. And you'll notice 31%, 30, 27, 24, 22, 21. The rate at which they're growing their revenue is decreasing. But 16% year over year revenue growth is still pretty phenomenal, guys. We'll check out shares outstanding. And Netflix does dilute their shareholders just a little bit, not very much. I'm sure this is just employee stock-based compensation. But I easily could see Netflix using its positive cash flow in order to start doing share buybacks. That would be smart for the company while their stock is currently 40% down. When we go to net income, you can see mostly they're positive. They've had 1, 2, 3 quarters since in the last basically 6 or 7 years in which their net income hasn't been positive, but I think they've got the formula figured out at this point. Let's now go to the price ratios because this is what I really care about. And you'll notice their price to earnings has been decreasing. Obviously, when they're in rapid growth mode, they're not worried about maximizing profit or earnings yet. And you can see that currently it's at 33, which is the lowest it's been basically since 2012 or 2013. But once again, I don't think they're fully maximized for profit yet. Price to sales ratio, it's currently 5.7. Once again, this is the lowest its price to sales ratio has been since 2016. So the stock is trading at a discount currently to its historical valuations. And that makes sense for the multiples to contract if Netflix now is a slower growing company. However, I think the company is being mindful of their shareholders, and they're currently taking steps to increase their revenue, even though their subscriber growth, at least in North America, isn't going up as much. Here's the first article I want to show you, and Netflix actually raised their prices in US and Canada, and this was back in January. I remember them doing this, and they sent me an email saying they were increasing my subscription by $1. Is that really going to make me cancel my Netflix account? And no. So anytime a company has this kind of pricing power where they can increase the price by a little bit and consumers don't cancel their service, this is very good for, once again, increasing the revenue, and this is going to start showing up probably in their next quarterly earning report. The next thing I want to show you is Netflix won't say never to having ads on their platform as rivals set up cheaper streaming services. So you think about HBO Max or Peacock or what are the other ones? It doesn't matter, but there are lots of streaming services basically just turning their service into cable. They're going to have commercial breaks at certain points during the programs, and potentially this will be a reduced cost or even free option for people to go on their platform, use it, watch their content. So up until this point, Netflix has resisted the possibility of a ad paid for version that is free for anyone to use, but they're not ruling it out. This would actually generate a lot of money for Netflix, as it would bring more people who don't want to pay but are willing to sit through ads. I personally don't want to sit through ads anymore. I'll pay my $9 a month, but lots of people would enjoy Netflix on an ad version for whatever reason. The next big piece of news where Netflix got a lot of hate is they are currently testing a password crackdown to, once again, stop people from just leeching off of their family and friends' accounts. And you can see the memes that are developing online. Here is love is sharing a password. This is posted on Twitter by Netflix back in 2017, and this Twitter handle is poorly aged things. And I don't think this is going to hurt Netflix in any way, guys, if they crack down on password sharing, because anybody upset by this isn't a paying customer. If you're the main account holder, allowing your friends or family to share your account, and you can no longer share your account with people who have been basically using it for free for 10 years, are you really going to cancel your subscription so you can't even enjoy it anymore just because, your second cousin can't get it for free anymore? So I see this as an upside. They're currently testing it in certain markets like Central America. Potentially this might not even go into effect. They want to see how this plays out. But once again, Netflix is searching for additional ways to maximize their revenue. This year, they're looking for ways, and they're going to make some announcements. Next article, Netflix and Scream. What would the streaming giant's theme park look like? Obviously, with Disney and Disney Plus, they have theme parks. There's no plans in the work currently of Netflix opening a theme park. Potentially, they could partner with existing theme parks in order to have a Stranger Things ride or a Squid Game ride. But they could just take the initiative and open their own park somewhere. Once again, just ideas for how a mature company now can find additional streams of revenue to make their shareholders happy. Next thing Netflix is doing is they're trying to get into video games. You can play video games on Netflix, sort of. I've not personally tried this, but once again, they've got the customer base, they've got the brand recognition and loyalty, if they want to pursue other avenues aside from just streaming TV and movies, there's lots of opportunities for Netflix. The final thing I want to tell you guys is I'm convinced that at some point in the near term, next couple months, this stock is going to pop on another viral show. Think Squid Games or Tiger King. This just happens for whatever reason. So when Tiger King was released on March 20th, 2020, how do you think Netflix share price responded? So this right here is the release of Tiger King. Netflix shot up 30%. Obviously, we were in the pandemic, and I think everybody was saying this is a good stay-at-home play. But then it happened again with Squid Games being released on September 17th. So here is, let's see here, September 17th. Netflix, how much did it go up here? Netflix went up 17% basically in 2 weeks on news that they had a hit viral show. Yes, of course, Netflix crashed 50% after the hype and the buzz wore off, but I'm not looking to be a long-term investor in Netflix. I'm looking to take an investment over the next couple months while it's beat down and then wait for the stock to pop. When we check in with my Schwab account year to date, I'm only down about $3,200 now, or about 5%. Pretty good considering how much of a hole I was back in late February. And before we take this position in Netflix, I want to tell you guys that I'm completely selling out of my long calls in Berkshire Hathaway. Currently, my long calls are up $20,000, and a week or two ago, I sold calls against them because for whatever reason, Berkshire here is going parabolic. When stocks get to all-time highs and there's no overhang, basically sell limit orders, yeah, stocks can run like this. But with Berkshire Hathaway, I think there's this longer trend slope, and eventually gravity is going to pull it back down, or it's just going to trade sideways for the rest of the year. So I will happily lock in some very nice gains of about $15,000 on my position in Berkshire. This basically saved my accounts the last 2 or 3 months. All right, let's go to the option chain for Netflix and show you how I'm going to set this up. Here is the option chain for Netflix, and I'm going to go with an expiration far in the future, specifically January 20th of 2023. This is in 305 days. So in the short term, guys, if the market or Netflix pulls back, I'm not going to panic sell. I think I'll have time for this to recover. I want to go with a strike of a nice even number. Specifically, I'm going to go with 400. That's about $15 out of the money on the call side. Let's go ahead and select this, and I'm just going to buy to open. I'm only going to do one contract because I'm only looking to spend about $5,000. Buyers are bidding $49.20. Sellers are asking $51.35. I'm going to execute this market order, and Schwab's pretty good about filling it at the mid price. Back to my account, and you can see I now have one call contract on Netflix with a strike of $400. Expiration date January 20th, 2023. And my cost basis was $5,077. So let's give Netflix a shot here. I'm feeling pretty good about it. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.